I don't necessarily hear that Southeast Asia is indeed the market port of choice today, what was probably 10 years ago.
It's literally a geography with 800 million people, almost 3 trillion in terms of GDP. And what that brings in context is in banking, it is a very high digital banking orientation.
Fintech founders, like many founders, are cash trapped. They would want to realize the revenue faster.
So I think it's more about 18 months before you are starting to see revenue accrual kind of stuff.
Anything less than $15-20 million capital raise, going there, you're probably trying to hit above your belt if you're not a Series A, Series B plus.
I wouldn't put it as that large a number. Comparing to similar bank size, about 35 to 40% better than India.
It's not fallen off from a cliff, but at least there is a definitive, noticeable downtrend. Hi, I'm Shubhanga, and I'll be your host as we explore conversations with thinkers, operators, and investors shaping financial services and the world of fintech. This podcast is not about headlines or hype. It's about first principles thinking, how capital flows, how products are built, and how real operators make high-stakes decisions. Welcome to this episode of Samvada. Today, we are joined by Param Deep Singh, who comes with extensive experience in the Southeast Asian market, selling enterprise software technologies to banks and insurance companies. In this episode, we speak about the Southeast Asian market. What are the various geographies that one should consider if you are a fintech founder? What are the margin pressures? And what should your go-to-market look like? Let's dig in. Thank you so much for joining us. And you've been in the banking and fintech world for now over 25, 30 years. And I remember during my days in India, whenever we used to talk about Indian startups kind of going out, Southeast Asia was always the first kind of point of contact or port of arrival for Indian fintechs back in the day. And of course, you've also been kind of the Southeast Asia head for Intellect and Polaris as well. So what I want to do in today's conversation is really, I don't necessarily hear that Southeast Asia is indeed the market port of choice today, what was probably 10 years ago. Would love to understand more from you in terms of like how should we understand Southeast Asia, and if there are fintech founders in our portfolio or otherwise thinking about Southeast Asia today, how should they be going about thinking? I know it's a very broad question, but I'll let you kind of start.
Thanks and good morning, Shubhanga. Absolute pleasure to be invited to have this chat with you. It's very interesting in terms of how the Southeast Asian market has evolved. But just before I step into it, maybe a little bit of context setting I'll take the liberty of doing. Spent 11 years in banking tech as business head for Intellect Design, and then was based in Asia. Spent 3 years there from 2022 to 2025. Done deals in Philippines, Thailand, Vietnam, Cambodia, and basically have currently been consulting with banks in Southeast Asia. So I guess the perspective that one lands up bringing is one of someone who's been on both sides of the table, the deal table, as well as being inside the thinking room. And very often, some of those conversations head, in a totally different, and they're remarkably different. Southeast Asia has sort of evolved. It's literally a geography with 800 million people, almost 3 trillion in terms of GDP. It's a young population with median age of just 34. And what that brings in context is in banking, it is a very high digital banking orientation, with almost most markets having 85 to 90% penetration on digital banking. At the same time, multiple markets are unbanked, whether it is Indonesia or a Philippines, nearly 50% unbanked, or even markets like Vietnam, which have 30% population that's unbanked. The region has been exploding on multiple trends. So, great question from you. There was a point in time where it was a hot region to for Indian founders to enter. It has been through its own cycle, and I genuinely believe that for founders building on a few fintech founders building on a few areas, it has now an opportunity that may land up closing over the next 18 to 24 months. Let me talk a little bit more on what I see as trends driving the region.
Yeah, Param, I think it'll be great for you to explain. Obviously, like India, Southeast Asia is probably multiple markets under a single bucket. So, if you were to kind of obviously, again, I have not really worked in the Southeast Asian markets myself. So, when I kind of think about it, Singapore seems to be the launch pad for Southeast Asia, kind of sitting, of course, here in London, or kind of whatever experience I've had in India. But clearly, the market is much more than Singapore and Malaysia, like you were suggesting. If we were to kind of give a bird's eye view of how should fintech founders think about Southeast Asian market, could you probably just touch a little more about what are those various markets and what are the kind of integrities there?
Sure, absolutely, and I think it's a great question. I have in the past often called the look-see into Southeast Asia as being a Singapore demo trapdoor. And the reason I call it a Singapore demo trapdoor is that many Indian founders think that the right way to enter Southeast Asia is through, let's say, Singapore, through demos done to the regional banks in Singapore. And in my view, that is, the most expensive way of doing it, and has led to many fintechs spending 18 months in their journey. You are absolutely spot on. It is 7 very diverse markets with very different operating cultures, as well as developing ecosystems. So I spoke about the unbanked populations in Indonesia and Philippines, very high on a growth rate for banking and fintechs, in those two markets. More mature markets are obviously Malaysia and Thailand. But the most common entry point of choice or a recommendation for Southeast Asia is actually Philippines, which lands up having English as the primary language, follows a lot of US both culture as well as US norms on banking practices. And therefore, for fintechs looking to expand into Southeast Asia, instead of falling into the Singapore demo trapdoor, the decision making actually happens with the CIOs in each of the banks locally in the country. So, Philippines, I spoke about as being an interesting market, a high unbanked population, profitable banks, many digital banks, coming in, 6 banks already with licenses. Thailand is another interesting market with 3 virtual banks having been given licenses, and they are going through the process of selecting their entire architecture, right from core banking to loan origination, because the pressure is on them to sort of declare a initial go live before the start of next year. Uh, the other market, which is interesting with a very large population, is Indonesia. There is a significant influence from OJK that wants to add almost 500 billion to banking assets, and they are focusing on digital banking in a big way. So, from an opportunity perspective, the large opportunities in the region are a combination of Philippines first, with Malaysia that has stable banks with almost five digital banks already out there, and lots of technology replacements happening, followed by Thailand, which I covered earlier, given the opportunities on virtual banks and many payment related regulatory changes being brought about by the Bank of Thailand. While Indonesia is a very large market in population terms, it lands up requiring Sharia compliance and has a very deep requirement culturally from Bahasa speaking below the C suite. And a lot of procurement is very intensive. So that's a sort of a high level contrast of some of the markets in terms of potential. My summary would be that Philippines is interesting with digital banks and unbanked population. Malaysia and Thailand are typical, second order market opening, for fintechs. And that's typically followed by a Vietnam that has a very high, that has about 30% unbanked, very high ROEs right now, high growth rate in terms of 6.5% GDP growth rate. Uh, but at the same time, Vietnam is all about the language, about the culture, and about being recommended to the bank. Been there, done it for 3 years. So that's the experience.
If I have to kind of just follow through on that, right? So you spoke about Indonesia, you spoke about Philippines, sorry, to begin with, Thailand, Indonesia, and then of course Vietnam, Malaysia as another kind of subsegment of this broad market. But when we kind of look at fintech, obviously, you can kind of, if you have to kind of further subdivide it from a product segment standpoint, obviously, uh, I did hear the words around digital banking licenses and so on and so forth. So there is banking tech, payments tech, which is kind of relevant to probably whatever you spoke about. But then there is also the aspect of wealth management. There is also the aspect of insurance. Of course, I'm now taking you back to your experience probably in G Money from the during your insurance days. Uh, if you were to kind of talk a little bit more from a wealth and insurance standpoint, would you say that the stacking of these countries would predominantly kind of remain the same for opportunities which to fintechs which are in wealth tech and insurtech, or how do you look at it?
I'll take the liberty of expanding a little in terms of what I see as potential opportunities. And then I'll bring both wealth and SME banking into context, wealth and insurance and SME banking into context. So I think amongst large opportunities for Indian fintechs are really in the SME lending space. Very high under penetration. Most banks across the region, whether it is Indonesia or Vietnam, are unable to, and Philippines, are unable to cater to the demand of MSMEs. Combination of underwriting, ability of studying cash flows more than the actual income. So I think that's where a lot of work has been done by Indian fintechs, combination of account aggregation, the ability to do cash flow analysis, use surrogates for underwriting. So I see the SME lending and banking business across Southeast Asia as I would say a very important and large opportunity. Payments is another space. Combination of the I would say expansion of NPCI taking UPI international, as well as a lot of cross-border play on remittances in the region. You would be aware both both Singapore, Philippines, and Malaysia have very large, and Vietnam have very large remittance flows. So remittance flows are likely to be in the $100 billion dollar region and growing quite rapidly. So the second area would be payments and cross-border remittances. That's a significant play that I see. Low lending is an area that's growing, and at the same time, capabilities both on the front end, which is loan origination, and collections. Is many banks in Philippines now are seeing the pressure on, and Vietnam too, are seeing the pressure in terms of retail loans, where a superior collections platform is definitely required. So I think a lending and collections powered by AI would be a third important category to focus on from a fintech perspective. Your comment in terms of where do you see wealth management platforms and the ability to do insurance distribution, both present interesting opportunities in markets like Vietnam, Philippines. So many banks in the Philippines are expanding their wealth management offering, and most of them have typically run that in the past through the internal CRM and core banking without a specialist wealth management system. So that's an important area. Similar trend coming up for Vietnam, where SaaS driven wealth management platforms, and I often call powered by like a wealth GPT for RNs, is a potential a need gap for Indian fintechs to build on. Insurance distribution in terms of platforms that help banks expand the gamut of alternate channels. So it could be positioning insurance as credit life on top of a loan or a credit card, or it could be uh, products that are easily distributed through alternate channels. But banks need platforms to be able to manage this, and that's where I think Indian fintechs, and I know some of the portfolio companies that you yourself have a significant potential to leverage.
And I think Param, so we spoke about obviously a lot of enterprise technologies in the banking or fintech across product segments, more from an India lens, right? So obviously, do Indian fintechs have an opportunity? What I'm hearing from you is an emphatic yes. But when I kind of have to think about, when I wear my product hat, the first thing that kind of question that comes to my mind is, what is the affinity for banks and insurance companies and fintech in these regions to even consider Indian fintechs? Or are they actually, what are the kind of competing forces? Do they actually look at the Western counterparts? Is Mambu the more preferred core banking? Or let's say if M2P were to kind of go there, then would they also be equally kind of welcomed? is a broad brush question that I have, and I think there are elements of culture that will probably um, that you may want to kind of talk about here. Just I'm curious about how do they think about us.
Sure, sure. So I think the entire there's significant evolution over the last few years in terms of how Indian fintechs are both positioned and considered by Southeast Asian CIOs. With the advent of how NPCI is building regional remittance capabilities, with the way banks like the RBI are able to provide balance sheet to the country within sort of days of the year end, and how very large banks in India are able to run, TPS transactions per second in the order of hundreds of thousands. I think that capability has been clearly recognized by banks and fintechs across Southeast Asia. So technical superiority, the scalability of solutions, the point about Indian vendors are more flexible and faster in being able to deliver on customization. I will pick up the point on customization a little later too, because I think what you customize versus what you should have as your local kernel is literally a debate in itself. But I think the ability for Indian fintechs to speedily meet, because of their technical expertise, the customization requirements is another area. So let me put it as technical superiority stands out, scalability of solutions given reference cases, understood. The piece about being able to do it faster and potentially cheaper than Western and Singapore-based solutions, clearly understood. So these are trends that come on the table. But I think what's also important is, at times it also comes with what I may call maybe a bit of baggage. And that baggage is, often, for instance, a founder or a CTO thinking about his product's technical superiority, missing out on what really is the problem that we are trying to solve for the CIO. In fact, one of my I would say key learnings, and I will talk more about learnings later, but one of my key learnings has been around how it's important to spend enough time asking questions before even a solution demo is given, because those questions are valuable insights that help you build specific use cases than a generic demo. So I think some of these learnings, at the same time, like I said, the baggage around at times too much focus on technical. So that's a bit of I would say, a bit of a watch out. The cultural aspect, sometimes, culturally sort of missing out, on certain nuances. So there's a Thai term kreng jai, right, which is basically they do not want to necessarily upset you or break harmony, which basically means they are not going to necessarily say no in a meeting. You have to have that cultural feel, and that's where potentially sort of a partner comes in. The other thinking that many fintechs may carry is, having done it in India, it is good enough for Southeast Asia. Most Southeast Asian countries have very strong regulatory requirements coming in from either BSP in Philippines or SBV in Vietnam or OJK in Indonesia, and therefore you have to be ready from a regulatory, readiness or a regulatory framework perspective to be sort of on the ball on that. And I think the other thing I would contrast is, you know, typically in India, we are used to maybe a 6 to 9 month, buying timeline, sometimes about a year. And in the event that there is a champion or a sponsor, even that can be accelerated. In my experience, Southeast Asia is like an 18 months. So it's like, I'm a keen golfer. So
And that's interesting. So, can you expand on why is it 18 months? Like, I mean, in the sense, at the end of the day, is it 18 months to a decision or is it 18 months to actually go live? And if it is 18 months to decision, then is it probably a 30-month timeline for it to go live?
So I think it's more about 18 months before you are starting to see revenue accrual kind of stuff. Because, and I'm presuming that, Indian fintechs, the products that we are talking of are not necessarily 12 to 18 month or 12-month implementation like core banking. If you look at payments, LOS, keeping in mind a 3-4 month implementation timeline, one has to be ready for a buying cycle that could be in the region of 12 to 18 months.
And and help me understand, you have obviously sold in India, you have obviously sold in Southeast Asia as well. What are those nuances that actually lead to such long sales cycles, and what is it that we could do as Indian fintech founders to essentially kind of, what are your learnings to reduce that cycle? Clearly, obviously, 12 months is a long cycle. Fintech founders, like many founders, are cash trapped. They would want to realize the revenue faster. And how do you kind of, what can you do to reduce this? Or is it something that it's best to kind of just assume that it won't change?
No, I think it's a great question. Uh, can it be faster? Yes, it can be. It can be faster. The role played by a sponsor, and identifying a sponsor who really is willing to stand out in front of, let's say, the chairman to execute a particular project within a timeline. And of course, the sponsor needs to be made also a champion for your solution. So I think that is what can help in sort of reducing the timeline. The other is also around, how do you ensure that you have a product with local regulatory requirements and typical localization that you can show right up front in your use cases and demos to be able to accelerate that. A third area would be, do you have a partner and a local team that has the right CXO connects to be able to get you feedback, which is often, not necessarily shared openly. So I think I would say those are areas that can help in reducing the timeline.
And that kind of naturally goes into my next question, which I was thinking, right? From a go-to-market standpoint, obviously, an Indian founder building, I mean, most often they would think about going outside India only once they have some reasonable product market fit and revenues kind of flowing in the Indian ecosystem. Now, what would you say is a right time for, and it could be in terms of the funding that they have raised, or it could be in terms of the revenue or product market fit that they've achieved in India, whatever is the metrics that you would want to kind of talk about. When should they start thinking about going to, let's say, Southeast Asian markets? Number one. Number two, increasingly in the last 2, 3, I would say probably 5 years post COVID, Middle East is becoming an equally big, I would say, ecosystem for Indian founders to consider. So, what startups would you say should rather consider Southeast Asia and not Middle East within the spectrum of fintechs, from your judgment and experience?
Great question. Middle East is an interesting market. There are markets in Middle East that, from a, I would say, a revenue realization perspective, potentially score over Southeast Asia also. Many markets in Southeast Asia are value conscious. So, an Indian founder very keen on a market entry may land up over committing on the customization, as well as kind of taking on a far lesser realization because of the need or the hunger to make a deal. I think the products which are, I would say, the products where uh, Middle East might be more interesting is if, for instance, you have a Sharia compliant solution, which is from a lending, uh, core banking, even trade finance perspective, very key for functioning in the Middle East. It is also important for markets like Malaysia and Indonesia, but many banks actually have a split Islamic and conventional, so you still have an opportunity to offer your solutions here. Um, Payments is another product where the Middle East has good potential too. I covered in our initial dialogue that SME lending, payments, insurance, wealth management, and digital banking are potentially product suites where Southeast Asia would have a equally strong potential, and maybe some bit of localization. Localization for the Middle East would also be there besides Sharia on local payments, etc. So the payment interfaces would be required in both markets, but I think the Sharia requirements, across lending and trade, would be different in the Middle East.
No, that's very fair, Param. And I think the other question that I was kind of thinking is, when it comes to going to markets beyond your home country, you spoke briefly about the local partner, and access to the CXOs in that. So, is it fair to kind of say that fintech founders who are thinking about going either to Southeast Asia or Middle East, before they actually kind of invest in their own, sales and solution engineering, whatever local teams, uh, to actually kind of, the first 12 months in a new country is better addressed through partnerships? How would you go about it, and how did you go about it at Intellect, for example? If you could throw some light on it.
Sure. So I think in past roles, while having your own local sales team and local implementation teams was clearly the need of the hour across the entire Southeast Asia. Uh, but having said that, identifying a senior ex banker who had, from a Rolodex perspective, the network where people would pick his calls at the CXO level. I think having such a person as a part of the team was a very key investment that sort of one made. Recommendations for fintech founders looking at these markets is, you know, uh, based on I would say each country, because they have their nuances. Vietnam is where the trio of FPT, CMC, VNPT, they land up controlling bulk of the deals. In Philippines, there are a few partners, but also amenable to they're also amenable to some of the consulting firms. Besides the local SIs, Thailand is more around the consulting firms, and Indonesia is where the telcos and the conglomerates that run banks, partners that have that experience play a very key role. So I would say, our experience was besides being besides both acting and being local from selling and delivery and support perspective. It was also important to pick up the right boardroom level information, which typically would not come your way, and that's where the role of the local partner was very, very critical. The boardroom conversation of when somebody is sort of not saying no in person, but is either waiting for a decision internally. So I still remember, in Indonesia there's this concept of gotong royong, which is how collectively a decision is made. So you can't necessarily bank on just one person answering your how your demo was, and look at that as a supporter for the way forward. It has to be by consensus. So some of these local nuances are very important, and a partner who has either sort of been there, done it, in his past life, and is sort of looking for uh, being associated with with a fintech in terms of shaping the fintech's strategy. I think that's the person to get on board. I would literally think that such a person is a is what we often had as a sort of a regional product council. So he's like your regional product advisor and needs to be positioned accordingly, by a fintech founder.
And would you say then it increasingly seems like anything less than 15-20 million dollar capital raise, going to these markets before that is probably, you're probably trying to hit above your belt if you're not a Series A, Series B plus.
I wouldn't put it as that large a number. Let me try and maybe go a little granular in this. So my own view is that I don't think you need a HQ in Singapore if you are a fintech keen to look at a Southeast Asian strategy. You have to think of which market is your priority market and build around that. So like I said, the mistake quite often people make is
Sorry, when you say build around that, so okay, I'll try to kind of contextualize this, because when a couple of our portfolio companies had to go to the Middle East, the consensus was you need to have some sort of a local entity, and the legal jurisdiction that most of them were comfortable with was either UAE or Saudi Arabia, right? Is that not necessarily the case in Southeast Asia? Like, would a Vietnamese bank be comfortable having the legal jurisdiction as India, for that matter, or would they prefer to have a Singapore?
so from where I was coming is because I'm suggesting a deep focus on your first market. You could work towards it with a Indian company that has local hires in those markets, eventually incorporating a local entity for the Philippines. As an example, the Philippines is good. So having a Singapore entity is what would blow up a large part of the capital that you were referring to. by going local within the country. So you are talking of, let's say, a general manager, etc., for the country. Eventually, as you build a pipeline, you are talking of two or three implementation folks, and you are talking of some bit of regulatory compliance support, either coming in by someone outside that's supporting you, or actually by in-house resources. So I think in this, for this kind of a planning, we are talking of somewhere in the region of 500,000 expense in the first year. So therefore, having your ARR sort of scale up plan build accordingly, so that you at some point, as you are committing some of these expenses, you also have visibility around the first deal in the region of that 300k ARR. That's the balancing that I would recommend. A firm with very deep capital can move the investments faster. Someone wanting to optimize would possibly need to have the hiring done as some demos and POCs are moving forward.
Oh, very fair. And Param, if you were to speak about the margins that the market would offer, and even if you could contrast it both to India and Middle East, how would you kind of say the margins are, and is it attractive enough for the founders to actually consider Southeast Asia? Let's just take Philippines as a market, because you spoke um, more about how that is a country with English as first language and large enough market, right? So how would you contrast the margins in these?
So, comparing to similar bank size, I would say about 35 to 40% better than India. But I would think Middle East would be higher than Asia. By and large, in my experience, markets like Saudi and UAE, with the blend that you can get in those markets, you are talking of a higher, or you're talking of a premium to Southeast Asia.
Yeah, I think that's in line with what we are hearing as well. And I think I want to now go back to the very first question that we kind of probably started, right? Which is what exactly changed in your, and you've been in the market for a long time. What exactly changed from the 2015 to 20 to post COVID in 2020 onward, 2021 onwards maybe, where the general conversation, and this is completely anecdotal, obviously, I'm not necessarily presenting any data, but anecdotally speaking, the number of fintech founders from India talking about Southeast Asia, and even kind of visiting the Singapore Fintech Festival, right? It's like a proxy for the number of people who were actually kind of going there. I remember I was there in 2019 during my S Bank days, but it seemed to have, if not fallen off from a cliff, but at least there is a definitive, noticeable downtrend in terms of the number of startups going from India to Southeast Asia versus India to Middle East. What has changed? And in your mind, has something further changed for the trend to kind of again be reversed?
Sure, sure. So, what's changing now is the fact that with the additional licenses in multiple markets, whether it is Thailand, the next phase of expansion for digital banks in the Philippines, and when I say expansion of a digital bank, it's not just the base solutions, but it's also, as these banks expand aggressively in lending, you would have need an origination, you would need a sort of a collections platform to support that. Um, so what's changed is now with a significant focus on cloud, and the need for modernizing archaic platforms and sort of moving that to the cloud, with regional clouds coming up in Bangkok, Hanoi, and Manila from literally all the players. So I think what's changing now is, uh, you know, combination of use of greater, cloud, use of AI, and AI enabled use cases pretty much sitting on top of the lending or collections or onboarding user journeys, uh, and a demand on that coming in by banks in the Philippines, Thailand, on top of their existing platforms. So for instance, you already have a loan origination. You're not going to change it because you want to bring in AI enabled use cases. But if there is a solution that has a plug and play, and provides those use cases, so the bank is interested. So I would say cloud, AI, the regulatory changes, with data residency getting enforced in Vietnam, with Indonesia pushing through higher digital banking and greater percentage of GDP sitting with banks. So that's what OJK is sort of building on. I covered what Thailand is up to. So I think these are some of the trends that are uh, creating a 12 to 18-month window of interest, for fintechs, and obviously Indian fintechs have an opportunity here. One of the trend that I would like to build on is how, as UPI permeates almost all of the 7 countries that we have been speaking of in Asia, uh, 3 to 4 are already on, and the balance are due. As that happens, it will also open up cross-border remittances in a big way. So I think those are the trends. And if I could maybe take a minute to summarize my own thoughts on it. So cloud, with changing data residency and efficiencies on old technologies that banks were carrying. AI, a very important second one. We spoke earlier on unbanked and SME lending. That's potentially a third driver, and the fourth is changes happening by regulators, either bringing in norms around residency or pushing the fact that we want far greater banking domination in terms of assets being controlled by banks.
And one last thread I wanted to touch upon, Param, with you is around the build versus buy kind of thought process, right? Increasingly with AI, more of the, at least the big Indian banks, and very similar to what I'm seeing here in the UK as well, are thinking about building, just given that they have access to engineering talent, they have access to AI, which is making engineering talent more efficient and productive, and they understand the subject matter far better than people who are not in the system do, right? So consequently, the services, IT services ecosystem is kind of obviously figuring out what their role could look like, in the build side of the equation. But there is definitely some sort of a headwind that we are seeing in the buying of especially these peripheral tools, right? You did mention about the fact that the core ones may or may not necessarily get changed in a hurry, but it's the peripheral ones which are potentially where the opportunities are for Indian founders. But equally on the other side, what and how do you see the current kind of headwinds from a build versus buy standpoint? I'm sorry, you're on mute.
Yeah. The way I have also been sort of seeing the trend in the market and internalizing uh, how banks would are balancing the build versus buy on which components with AI do I want to build internally, and which are the ones that I would still maybe focus on sort of buying. Uh, I think customer experience and user journeys that help in bringing better cross sell, better onboarding, uh, those are, I would say, use cases that are still external to a banking product processor, and therefore are experiments in terms of either creating a next best product to cross sell, or I covered earlier the concept of a wealth GPT, equipping an RM with who with product information, customer information, etc. So I think uh, uh, AI investments within banks on the build side are largely on use cases that help improve customer experience, can be done quickly, maybe faster internally, but won't compromise the sanctity of internal banking, you know, uh, data. So I think that's an area. So therefore, trends in terms of uh, build on AI use cases would go on to, besides onboarding, sitting on top of an LOS with a AI enabled engine that's producing a parallel score that's feeding into an LOS. Once again, not creating a transaction on the banking system using a AI built solution. Similarly, on collections, so if it can help you, prioritize buckets in user allocations, etc. So many platforms doing that. So I think a larger bank build is on either customer experience or bits of operational efficiency, or pieces that could control the risk. I think where banks do not want to necessarily build are the core platforms that carry transaction data. So um, so therefore, whether it is a core or a lending management solution or a trade solution, and anything that is kind of processing that data is not forming part of, let me build this internally using AI. I think I hope that sort of relates to.
No, I mean, amazing. Thank you so much, Param. Actually, for me, it was an amazing learning experience. I think for me, the biggest takeaway is, of course, uh, the various markets. Philippines being the biggest English-speaking market there is something that probably I knew it, but it never kind of hit me until this conversation. And then, of course, you spoke about the need for partnerships. How would you go to market? The margin pressures, and what are the different kind of products that might be attractive to the Southeast Asian market. I think what we should do is follow on with this for this podcast is to actually do a country deep dive. Um, Probably take each of those countries and probably follow on with different. Um, yeah, I mean, hopefully we can do that sometime in the next coming days. But thank you so much for your time and take.
Thanks, Shubhanga. Love to sort of, love to plan that. And I think as a maybe a sort of a closing few comments in terms of, beyond maybe what are typical mistakes, what are the winning principles that sort of one has seen. So I think the first one I spoke of is making sure that you understand the bank's constraint and not necessarily start with a pitch in mind. The second principle that I would say has been part of my learning is, how do you get a reference customer in in place? A reference customer who's also willing to put his name on your website, because that is what will really help you build your pipeline from there. How do you get a how do you ensure that regulatory requirements and data residency is actually a key part of your pitch and not a question that comes up necessarily in procurement? uh, how do you build the right local channel through a partner? I think we sort of spoke on the role that a partner has with banking experience. And then finally, my fifth learning would be really around how do you ensure that you spot and nurture a potential sponsor, and that sponsor could become your product champion. So I think those are my key learnings that I thought would be useful to leave behind.
Amazing. I think on that note, let's close the conversation here, but hopefully this is going to be the first of many more that I'm going to do with you, Param. Thank you again.
Enjoyed the conversation, Shubhanga, and look forward.